This is Nightly Business Report with Tyler Matheson and Sue Herrera.
I was fired because of the Russia investigation.
The former FBI director gives a motive, but stops short of saying there was a crime. And Wall Street watched intently.
Need a loan? Why more people and small business owners are looking to Silicon Valley, not the big banks.
Call blocked, but those unwanted robocalls seem to keep coming. What you and your telecom company can do to stop them. Those stories and more tonight on Nightly Business Report for Thursday, June 8th. Good evening, everybody. I'm Sue Herrera.
And I'm Bill Griffith, in tonight for Tyler Matheson, obviously coming to you this evening from the New York Stock Exchange, where traders spent most of this day just riveted by Washington, weren't we all? Wall Street did not appear to be too concerned about what the former director of the FBI told lawmakers. In fact, toward the end of James Comey's testimony on the Russian investigation, the Dow actually hit a record high before pulling back. The Nasdaq, though, did close at 1 today. Many investors do not think the hearing produced a smoking gun that could harm the president's business-friendly agenda. In the end, the Dow Industrial Average added just 8 points, closed at 21,182. The Nasdaq gained 24 points to that high, and the S&P moved fractionally. So while the drama wasn't felt on Wall Street, there was plenty of it on Capitol Hill. Eamon Javers reports for us tonight.
Today, former FBI Director James Comey defended his integrity and the integrity of the FBI, both questioned by President Trump, even turning the table to question the president's intentions when asked why he compiled notes on his meetings with the president.
I was honestly concerned that he might lie about the nature of our meeting, and so I thought it really important to document. That combination of things I'd never experienced before, but it led me to believe I got to write it down, and I got to write it down in a very detailed way.
Comey admitted giving the okay for portions of his notes to be leaked to the press after President Trump tweeted that Comey should hope there were no tapes of their conversations.
The president tweeted on Friday, after I got fired, that I better hope there's not tapes. I woke up in the middle of the night on Monday night, because it didn't dawn on me originally, that there might be corroboration for our conversation. There might be a tape. And my judgment was I needed to get that out into the public square. And so I asked a friend of mine to share the content of the memo with a reporter. Didn't do it myself for a variety of reasons, but I asked him to because I thought that might prompt the appointment of a special counsel.
Before a hushed audience on Capitol Hill and tens of millions watching across the country on TV, James Comey's first public appearance since being fired as FBI director by President Trump left the most important questions unanswered. On whether he thinks the president's behavior relating to the investigation of Michael Flynn amounted to obstruction of justice, Comey deferred to the newly appointed special counsel investigating Russian interference in U.S. elections.
That's Bob Mueller's job to sort that out.
On whether he believes the president colluded with Russia,
it's a question I don't think I should answer in an open setting.
The president's attorney, Mark Kasowitz, fired back at Comey, questioning his credibility while embracing Comey's confirmation that the president himself was not under investigation. For Nightly Business Report, I'm Eamon Javers in Washington.
And the other big story is coming out of Great Britain. According to the exit polls, Theresa May's Conservative Party may not have a majority in Parliament. There was swift and sharp reaction initially in the pound. Wilfred Frost reports from a rainy London this evening. Wilfred?
Hey, Sue, yes, indeed. If this exit poll is correct, then we are headed for a hung parliament. That is when nobody wins an outright majority. A reminder that there are 650 seats at play, 326 therefore needed to win an outright majority. The Conservatives predicted to get 314, 12 short of a majority, 17 less than they had before this whole process. What next? Well, there's no clear coalition partners for the Conservatives, so either they will try and form a weak minority government and all the uncertainty that comes with it, or Labour, who have come second under Jeremy Corbyn and done well, gaining 34 seats to 266, try and form a coalition with some other partners. There are some possible partners as well. The Scottish National Party, the Liberal Democrats and the Greens could all reasonably be expected to come to an agreement with the Labour Party, but that only totals 315 seats, still short of the 326 to get a majority. So you could describe this as the perfect storm of uncertainty for markets. That is the reason why, as you said, the pound fell initially some 2%. Sue?
Let me ask you a question here, Wilf, if I may. Knowing that Theresa May is a Brexit hardliner, what do these mixed results mean for the Brexit process going forward? It's probably a little too early to know at this point, but what do you think?
Well, it's a great question. Certainly she was framed as a Brexit hardliner. The first takeaway you would have to say is that the intention to begin Brexit negotiations in 2 weeks, which was the case before today, looks fairly unlikely because it's not even sure we'll have a firm government by then. The second thing is to say that if Theresa May goes ahead with a weak minority government, then her hand will be a lot weaker than it would have been if she hadn't called an election, and certainly a lot weaker than she wanted it to be by calling this election. The second eventuality, if Labour did manage to get together a coalition, it would rely on parties like the Liberal Democrats and the SNP that want to have a second referendum and stop Brexit. So it's interesting to see the reaction of the pound, which is down. Some traders said if this result came about in the long term, the pound could rally if Brexit then didn't come about.
Wilfred, thank you so much. Wilfred Frost reporting for us tonight from London. Bill?
So with the news out of Great Britain and the James Comey testimony now over, what does this mean for the markets and your investments? What a day this has been. Mark Lucchini is Chief Investment Strategist at Janney Montgomery Scott. We'll get to the Brexit or the UK vote in a minute, but first to Comey's testimony today. No real smoking guns, or at least that seemed to be the response of the markets. What'd you make of that, Mark?
I would concur with that interpretation, Bill. I mean, the fact of the matter is, I think the market let out a proverbial sigh of relief toward the end of the testimony. And you saw that in the immediate aftermath of the conclusion of Comey's speaking. The market ran up to about plus 60, 65 points, which it gave a good, if not all of it, back by the end of the day. But nonetheless, the relief was we didn't hear anything particularly new. There was more regurgitation as to what's already been out there. And as a consequence, the market, at the moment at least, seems to have dodged a bullet.
So, Mark, what does this mean for the agenda for the Trump administration, which is focused on some very business-intensive sectors, infrastructure, and things like that? Do those stocks then get kind of a second wind?
Sue, I don't know if we see an uptake quite that quickly to see a reassertion, if you will, of the Trump trade. The fact is we still have an independent investigator looking into the Russian circumstances and probing around the same things that were brought up in the course of Comey's testimony. So it hasn't necessarily gone away. It's just been deferred or at least heightened by way of the activity surrounding it. And so it'll continue to lurk out there in the background. In the meantime, we have an economy that is doing reasonably well in terms of posting positive growth, but some of the economic data we've had over the last 2 months has been comparatively soft from what we saw earlier in the year. So markets are unlikely to regain that economic sensitive footing until we see better economic data to support why earnings should be beneficial to those more interest rate sensitive sectors.
And quickly, before we let you go, we know that since the Brexit vote, the FTSE has been up appreciably, the stock market there in England, but the pound has gone down. Now we have these questions about the UK vote results. What happens now, do you think?
Bill, I think it's complicated. I think the good news is that Brexit is likely to continue going forward because it was supported by both the Tories and Labour. But the fact is, you saw this parallel trade between the pound strengthening and the strength in the FTSE. I think that's going to be unwound because obviously the decay we're seeing in the sterling, at least so far, is indicative of the concern relating to the inability to get a majority government. And in fact, we could see another David Cameron with regard to Theresa May actually resigning, which would create some chaos in government there. So I don't think it's necessarily a positive at this juncture by any stretch of imagination, particularly in the aftermath of the shock wave associated with how wrong, once again, the polls were in assessing who's going to walk away with the majority.
And we are seeing chaos in the currency markets tonight already. Mark Lucchini from Janney Montgomery Scott, thanks for joining us again.
Thanks, Bill.
Meanwhile, the European Central Bank appears to be taking baby steps toward cutting stimulus. Policymakers there today did not make any changes to interest rates, but they did deliver a modest change to their guidance. The ECB moved to drop a reference to the possibility that interest rates could move even lower in the future, but the president of the central bank did express concern about inflation.
Measures of underlying inflation remain low and have yet to show convincing signs of a pickup, as unutilized resources are still weighing on domestic price and wage formation. Underlying inflation is expected to rise only gradually over the medium term.
And while inflation does remain low, Mario Draghi added that the growth in the Eurozone is exceeding expectations.
Here at home, the House of Representatives votes to undo much of the landmark banking law passed after the financial crisis. The vote to replace the legislation known as Dodd-Frank was largely along party lines. Republicans have argued that rules designed to prevent another meltdown were hampering the economy by making it harder for community banks to operate. The bill's fate in the Senate is uncertain.
Still ahead, tech companies are invading new territory, and it has the nation's big banks on the lookout.
About 3 million potential first-time homebuyers have been shut out of the market over the past decade. According to a new study, tight lending and a shortage of affordable homes in many markets has reduced the pool of potential buyers. First-time homebuyers are considered a key component of housing demand. The results of the study suggest the market's recovery of the past few years could have been even stronger.
Nordstrom considers going private, and that's where we begin tonight's Market Focus. The retailer said that members of the Nordstrom family have created a group now to explore the possibility of taking that company private. Nordstrom also said no proposal has been made yet, but investors seem to like the possibility, sent shares up more than 10% today to close at $44.63. Alibaba sees revenue growth that blew past analysts' expectations. The Chinese e-commerce giant said it expects sales to rise as much as 49% this year. Shares popped by 13%, closed at $142.34. J.M. Smucker saw sales fall as the maker of Jif peanut butter said that there was weak demand for its coffee and its pet food products, but cost cuts helped to offset that decline, and that allowed revenue to top street expectations. Earnings also fell, but they came in ahead of estimates at the same time. Shares off more than 1% for J.M. Smucker to $128.51. Sue?
Bill, the drug maker Valeant said it would sell Innova Pharmaceuticals business for nearly $1 billion as the company ramps up its efforts to trim its debt load. The unit will be sold to a company jointly owned by private equity firms Pacific Equity Partners and Carlyle Group. Shares of Valeant rose nearly 9% to $13.26. In a regulatory filing, clothing retailer Urban Outfitters warned same-store sales in the current quarter are falling in the high single digits. That's a steeper drop than what the street was expecting, and that news sent shares lower by 10% to $16.35. Yahoo shareholders approved the sale of the company's core assets to Verizon for $4.5 billion. And according to reports, Verizon will lay off more than 2,000 employees at Yahoo and also at AOL as it works to combine those two units. Now, when the deal closes next week, Yahoo will change its name to Altaba, which primarily has its stakes in Alibaba and Yahoo Japan. So shares of Yahoo rose thanks to Alibaba's upbeat forecast that we just told you about, up about 10% to $55.71.
Traditional banks are facing some tough competition from the likes of tech companies of all things. According to the Financial Times, companies like Amazon and transaction processing companies PayPal and Square are issuing consumer and small business loans. Ben McClanahan wrote about it for the Financial Times. He joins us tonight to talk about this. And you have to pity the banks themselves. They had the financial crisis, then they had Dodd-Frank. They've got low interest rates they're facing. And now this.
Yeah, now they've got Amazon breathing down the nose.
Yeah, Amazon in particular. I mean, why is it that they are getting into this business, and why have they been so effective?
Well, it's hard to say for now whether they've been effective or not. They've certainly been quite big. It's been a reasonably quiet effort so far. About 6 years in, they've built a loan book worth about $3 billion. And they've done that by taking advantage of all the terrific data they've got on all the businesses that sell their goods through their platform. It's about half the units that Amazon ships worldwide is delivered by these sort of third-party businesses. And what Amazon has done cleverly is to take a look at all the sales, the sales histories, the sales projections, the seasonal dips, and so on, and has judged certain pockets of these businesses to be worthy of credit. So it's given them, pinging them with offers of tens of thousands of dollars.
It's also, is it not, because the Amazons of the world and other tech companies are not as restricted or as restrictive as the banks are with their lending standards? Yeah,
that's a very good point. I actually talked to the head of Amazon lending, as they're calling it. He didn't actually know which regulator he should have kept abreast of this. That's a sign of the sort of regulatory vacuum these guys are operating in. And you're very right to observe that the big banks in particular have been suffering, they say suffering, under a very punitive supervisory regime over the past few years. And that's made them very wary of lending to anyone that might default, to anyone that might sort of sue them later for sort of wrong advice.
Don't they have to be chartered to make loans? How does this work regulatory-wise?
Well, this is something I plan to do more reporting on. As I said to the guy yesterday, I asked him, what's the supervisory situation here? Do you have state-by-state banking license? Are you federally chartered? And the answer is no. I suspect it's because they're not actually creating money. They're just recycling their own cash deposits. So that's, that's entirely within board. But I think the fact that the regulators haven't kept a close eye on this has been a boost to Amazon's fledgling business.
Do you have a gauge as to how predominant this might eventually become?
Well, $3 billion in about 6 years isn't bad going. $1 billion of that has been within the past 12 months. So there's very much an acceleration of the pace here. And as you said earlier, it's not just Amazon. Square's doing it, the payments processing company. PayPal has two separate businesses, PayPal Credit, that's to consumers, and PayPal Working Capital, that's to small businesses. Yeah, together we're probably talking about $10 billion, which is a tiny pinprick in the context, say, of JP Morgan Chase with its $2 trillion balance sheet. But, as I say, there's a very sharp pace of acceleration.
Right, yeah, Amazon started as a small pinprick as well at once upon a time.
$18, and now it's worth $1,000.
Ben McClanahan from the Financial Times, thanks for joining us tonight, very interesting.
Coming up, the rise of robocalls, what the industry is doing about them, and how you can make them stop.
We've all been there. You run to pick up the phone, and instead of a friend or a family member, it's that pause, and then a recorded voice trying to sell you something or collect a debt that you don't even owe. Robocalls like those are on the rise, if I didn't have to tell you that, despite a government crackdown. Just this week, the FTC announced $280 million in civil penalties against the Dish Network, including for some robocalls. So why are the calls still rolling in? Andrea Day has our story.
Hello, this is Rachel at Cardholder Services. It is urgent that you contact us.
It's a robocall, an automatically dialed call bothering millions of Americans on a daily basis.
There's about 30 billion robocalls a year now.
And so annoying, Alex Quilici developed an app to try to stop the madness.
It's a pitch from Emily the travel spammer or a fake Microsoft, and there's nothing worse.
This is an important notice regarding your automobile.
I get probably, I would say, 10 calls a day.
The government's do not call list was supposed to stop these pesky telemarketers. So why does it seem like it's getting worse?
The do not call registry actually works for legitimate businesses. The problem is all the people who don't respect it, who are the scammers who could care less.
That's right. The new technology we love to use has also made it super easy for scammers.
And unfortunately, it works. People fall for the scams enough to make it worthwhile.
We sat down with the Federal Trade Commission, the agency behind the do not call list. The FTC says consumers lose $350 million every year falling for robo ripoffs.
The FTC investigates unwanted calls, and we do try and track down where these calls are coming from and bring law enforcement actions to stop them.
But according to the FTC, most robocalls are coming from overseas, where scammers try to stay outside the reach of regulatory authorities and blast out calls for next to nothing. Last year, the FTC received nearly 3.5 million complaints about the calls. That's up 60% from 2015. The Federal Communications Commission, or FCC, also regulates telemarketers and sets rules for providers, telling us, quote, unwanted calls, including illegal robocalls and telemarketing calls, are the top consumer complaint the FCC receives each year.
I've never seen anything like this.
The technology has also made it easier to spoof calls, where it looks like the calls are coming from your bank or someone nearby.
Now they're coming in from my own area code.
So how can we end it? The FCC is testing letting providers block some calls that are likely scams. And according to the trade group that represents most landline providers,
we can return trustworthiness to the caller ID information, and industry is working on standards on that front.
CTIA, the wireless carriers trade group, says it's united in its efforts to defeat robocalls. These efforts collectively stop more than 1 million robocalls every day. But for now, Quilici says his free app can help.
Gmail plays an out-of-service greeting to any number we think is a bad guy.
His biggest tip, don't talk to strangers.
Everybody has to get out of the habit of picking up the phone and answering if it's not a number you don't know.
And there's a way that you can help. When you get robocalls, write down the numbers and share them with the FTC. Just go to complaints.donotcall.gov. They will pass them along to apps like Umail so they can block the calls for you. I'm Andrea Day for Nightly Business Report.
The big phone companies like T-Mobile, Verizon, and AT&T are taking some steps to flag and block those robocalls. But is that enough? Is there more they can do? Roger Chang is the executive editor at CNET, and he joins us now. Roger, good to see you. I guess that is the question. Is there more they can do? And if so, what?
You know, they've actually taken quite a number of steps to block robocalls. It's definitely tough. I don't know if they've done as much as they possibly can, but they've definitely taken a step in the right direction. Most of the carriers have programs in place to automatically detect and block some of these robocalls. Of course, they can't get to all of those calls, which is still a problem. And legitimate telemarketers still will get through. And so, you know, it's not 100% yet. But there is sort of a concerted effort. The FCC has something called a robocall strike force, as dramatic as that sounds, sort of a group of these phone companies that have gotten together with the FCC to fight robocalls.
And just the other day, Roger, I noticed there was a message on our home phone. We have a landline. Yes, we're dinosaurs. And but the phone never rang, and it was a robocaller. And now I read that they are able to send a message without even ringing your phone these days, right?
Yeah, the new trend, the new disturbing trend is ringless voicemails or ringless robocalls. Your phone doesn't ring or rings once, and all of a sudden you've got a voicemail that pops up. In fact, a company is actually trying to argue that because you're not technically being called, they shouldn't be falling under these consumer protection rules. The FCC is actually arguing, or is considering that proposal now. The Attorney Generals of New York, Kentucky, Connecticut have already, expressed their desire that the FCC squash this attempt. But yeah, there's definitely still aggressive attempts to get more robocalls into our homes.
Yeah, Bill's not a dinosaur because I have a landline as well. But does it work the same way, or is there an advantage if you are only a wireless consumer versus one with a landline?
I think if you're a wireless consumer, you have a few more options. Like I said, T-Mobile, AT&T, all the major wireless carriers have programs in place. Some of them are automatic. Some of them you have to kind of opt in that automatically detect some of these robocalls, but they obviously don't do enough to catch all of them. I know my wife, majority of her calls now are robocalls or from telemarketers. I mean, the best advice is to not pick them up. She's pretty smart about it. If she doesn't recognize a number, she'll just hang up really quickly.
She won't, yeah. I guess that is the best advice. Roger, thank you. Appreciate it. Roger Chang with CNET.
I've solved it. I don't even answer the phone when I recognize the number. I just don't answer the phone.
Well,
if it's important, they'll leave a message.
All right. That's Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us. We want to remind you this is the time of year your public television station seeks your support.
I'm Bill Griffith. Thank you for your support, by the way. Have a great evening. We'll see you tomorrow.